All right, I've got Brady Mullins with me from CrossCountry Mortgage. He runs our reverse mortgage department. And CrossCountry Mortgage, we've got departments for almost everything. So we really find that specializing in certain segments of the financial market have really benefited us. For instance, construction perm loans, renovation loans, reverse mortgages. I really need people like Brady to help me guide my clients in the right direction when it comes to reverse mortgages. So last week, I interviewed Brady on reverse mortgages. We talked about why they exist. We talked about how does it work and how do we get one. Today, I want to talk a little bit more with Brady about why, first of all, and what negative perceptions do people have, and then what misinformation may be out there, and then how do we learn whether it's the right thing for you? So if you are considering a reverse mortgage, maybe you're 62 years old or older, maybe you know somebody, maybe you have a grandparent or parent that may be aging out, or maybe you're just curious to know if it might be right for you in the future. I want to bring Brady Mullins, CrossCountry Mortgage, on the Lone Ranger radio show. Brady, thanks for joining me today. Appreciate you very much.
Thanks, Bruce. It's great to be here.
Yeah, I had a lot of great calls from last week's interview with you. We're going to do a 3-part interview. This is number 2. If you'd like to go back and check out number 1, you can go to Bruce Woodburn, the Lone Ranger on YouTube, and you can listen to all of my podcasts there and the interviews with Brady and the interviews with Sandy Lutz with my renovation department, which we did last week as well. Brady, tell me a little bit about the perceptions that people have for reverse mortgage. Why is it negative perception about it?
There's a lot of misinformation out there, and I do a lot of CE classes for financial professionals. That was my background, by the way. I haven't been selling reverse mortgages for 20 years. I had an independent financial and accounting practice. And when I came across these from the thought leadership in the financial planning space, people like Dr. Wade Pfau, Barry Sachs, Michael Pitzes, Jamie Hopkins, the thought leadership in the financial planning world started writing content about these, basically saying, you really should understand how these work because it's a great way to integrate the wealth that sits in people's home into the overall financial plan. And the more I started digging, the more I just became convinced that this is probably the most underappreciated and overlooked financial tool on the platform. There's others that are good, and this one is good too, but it's the most overlooked, which is, I wrote a book about it that I called reverse mortgages the financial ugly duckling, because people keep trying to compare it to something that they know, but it's its own financial tool. And once you understand the machinery of how it works, it's really quite elegant and helpful.
Absolutely, I agree. And I think that there is a lot of misinformation about reverse mortgages out there. And to be honest with you, people, I think, shy away from things that they don't understand. If they understand it more, then they're able to make an informed decision based on really what they need. So my first question would be then, dispel some of these negative perceptions that people have.
The biggest and most prevalent and most stubborn one, which isn't true, is that the bank owns your home. People think that with a reverse mortgage, the bank owns your home when you pass away. And that isn't the case. And it's never been the case. There's a line of credit. So think of it, it's more like a HELOC really than any other mortgage. It's a line of credit and you have a credit limit and there's a balance. Now, when you sell the home, the balance is due because that's how lines of credit work.
Yes.
But the bank doesn't own your home any more than it owns the home when you have a regular mortgage. You own the home, you're on title, but there's a mortgage balance on it. There's a financial component to that.
And there's a lien against it for the mortgage, the same way it would be with any mortgage.
Yeah. People will often just misunderstand, but it's very simple. People overthink it.
Yes.
If there's a balance, it has to get paid.
I've got more questions to ask, but if you have questions for me, you can call me now in Orlando at 407-706-3313 or Tampa Bay 813-213-4009. If you have any questions about reverse mortgages or any other mortgage question that you might have. All right. Question 2 for Brady Mullins, the misinformation. Give us some updates on that. And we discussed, can our heirs keep the house? So let's say my parents did it. They both passed away. Can I get that house? Do I have to refinance it? How do I get my hands on that house?
So if your parents have a reverse mortgage on a home and they pass away, the kids, 99% of the time, the kids are going to sell the house anyway. So let's imagine it's not a reverse mortgage. It's just a HELOC or a regular mortgage. If they pass away in a home that's worth 600 grand and there's a $200,000 mortgage on it, what do you have to do as the heir? Like,
You sell the house and you get the difference.
yeah. And that's exactly how it works with a reverse mortgage. Whatever the balance
So the
is.
bank is not going to keep the profits. They're
No,
not going to keep the difference.
no, it's the balance that has to get paid. And what's often very useful is if your parents pass away in a home while you're selling it, you still have to keep the mortgage payments going.
Correct.
Because reverse mortgages don't have payments if you don't want to. By the way, that's an option. You don't have to, but you can go through cleaning up your parents' estate and it can take months and you don't have to make mortgage payments while you're doing that.
Wow. That's a
can be
great
convenient.
point. That's a really good point. Yeah.
So it's a lot simpler than people think. It's the balance has to get paid when you sell the home, but that's true of every mortgage.
And so what age do you have to be to really do this?
Generally 62, but there are some products where you can be as young as 55.
Okay. Are they HECM products?
Not that HECM requires you to be 62 or older.
Okay.
There are other non-FHA reverse mortgages. They still have to comply with the laws, like they have to be non-recourse. And some of those go down to age 55 and over instead of 62.
So if you were able to retire and you had plenty of money to live off of, including making a mortgage payment, is a reverse mortgage still possibly right for you?
I'm going to do one the day I turn 62. Because yeah, as a financial advisor, I told all of my clients, if you have enough equity in your home, get a line of credit. And this is before I really understood reverse mortgages. So this was, I guess, 10 years ago, before I started really digging into these. I told all my clients, hey, get a line of credit on your house because you never know, right? If some life curveball comes and there's a medical emergency or a kid needs this or that, you'd much rather put it on a HELOC where the interest is possibly deductible, depending on what you use the money for, and it's cheaper. You don't want to put it on a credit card. You don't have to sell. You don't want to have to sell your retirement assets. Lines of credit are very, very useful tools for people who are out of assets and for people who have lots of assets.
I could not agree more, because I'm going to tell you, and generally what happens is that life event happens. And once it happens, the person no longer qualifies to get a regular mortgage. So I had a client recently. He was making $250,000 a year. He lost his job. He goes, Bruce, I'm having trouble making my payments. I'd like to pull 150 grand out of my property. He had tons of equity, but I couldn't get him a loan because he didn't have any income anymore. Yeah. So if he would have had it already in place, he wouldn't have gone through that.
Yeah. And the beauty of the reverse mortgage is if you want the balance to go down, you can make payments. Guess what that looks like? Every other mortgage that people are used to.
Sure.
So if you want to make payments, you do that. And if you think you have something better to do with the cash flow than pay down the balance, then you can do whatever you want with it. It's just that the balance doesn't require a payment. Now, I don't want to make this sound utopian. Whatever charges exist on the balance, if you don't pay them, it will accrue on the balance. But that's only an option that you have. If you want to make payments, you make payments. If you have something better to do with the money, or maybe I think of my parents, like if my mom were to scrimp one iota so that I inherit a house free and clear while she's not living the lifestyle that she deserves, I'd be furious about that.
Sure you would. And you'd be selfish.
Yeah. If she could use some of that equity to live a better lifestyle, if I inherit, let's say it's $1 million house by the time she passes away. If I have a $400,000 mortgage to pay off when that happens, I'm going to be so grateful that I inherited $600,000 worth of equity. Right? There's no reason why I need to inherit the house free and clear. I want her to use that wealth to live a comfortable life for herself. It's not mine. That's ridiculous.
So what if somebody had a home, they had plenty of equity in it, and they wanted to retire, but within maybe 5 years, they wanted to sell that because it was going to help them fuel their retirement? Would a reverse mortgage still be right for them?
I would say that's probably the biggest, I don't want to call it a red flag, the biggest divider. If you're thinking of moving from that property in the next handful of years, there's probably a better financial tool that's more suitable for what you're looking for than a reverse mortgage. Because reverse mortgage, just like any mortgage, by the way, you wouldn't refinance somebody who was planning on moving in a year because the cost of the loan, there's not enough time for that crossover to happen where it actually gets a financial benefit. And so there are certainly times where, in fact, I think there's two categories. The first category for somebody who should not consider a reverse mortgage is somebody who's planning on leaving the house in the near future. And I know that I'm being vague with near future because it depends on the person's circumstances and what other.
Even 5 years, less than 5 years.
Yeah, there's probably a better financial tool for what they need than a reverse mortgage.
Yeah.
So that's the first one. And then the second one is just people, I don't know how to describe this in a short way. I'll do my best. But for people who have poor financial discipline, imagine this. You and people listening, can you think of anybody who might have a problem with life if all of a sudden they had access to $300,000 worth of tax-free cash? Like, we all know scenarios where that could actually be a problem for somebody. The obvious ones are things like addiction, or things like just people that can't hold
Gambling
on to
could be
money.
any
Yeah.
number of things.
But it's also some of the more subtle ones. Is a lot of times we see kids or grandkids that are frankly stealing from their parents or grandparents. And the grandparents have a hard time saying no to this kid because he's gonna kick this addiction this one last time. He just needs money one more time. And before you know it, all of their assets are gone.
Yep.
And a reverse mortgage, like if they get access to hundreds of thousands of dollars worth of cash, that could be a problem. Now, it's not up to you or me to tell somebody, hey, you can't have access to your wealth because we don't think you'll do it wisely. That's not
No.
not up to us to
We're
say.
not the police on that.
Yeah, but it is something that might raise a red flag where we'd want to get some family members involved and make sure that, hey, if we give mom and dad access to the equity in their home through a reverse mortgage, we want to make sure that this is a long-term solution, not a short-term solution. So those are the two categories where I want to get careful.
I appreciate that. Listen, we've run out of time. Brady Mullins, CrossCountry Mortgage. He is in our mortgage department. If you've got questions about reverse mortgages, give me a call. I will make sure that all your questions are answered, that you're comfortable with it. If it's right for you, we'll help you with it. We are a national lender. We're in all 50 states. We can help you. And there's no middleman. We're not mortgage brokering this out to anyone. Brady, thanks for joining me on the Lone Ranger Radio Show. If you've got questions for me, then you feel free to call me. Orlando, 407-706-3313, or Tampa Bay, 813-213-4009, or get your application started at webringyouhome.com. If you would like an in-person meeting, a phone meeting, or a Zoom meeting, we can accommodate you either way. Thank you so much, Brady, for joining me. I look forward to number 3 next week, so you'll have to stay tuned for that. Again, if you want to check out number 1 or number 2, go ahead and go to Bruce Woodburn, the Lone Ranger, on my YouTube channel, and you can check him out there. Thanks. Have a great day, Brady.
Thank you, Bruce.